Hey guys, Nicola here from Conscious Crypto Traders, and I am joined with Alex from Marzell Money, a YouTube channeler that I follow. I'm on his Discord server. He's giving great information, great tips. So I asked him to come and talk to us about all things strategy with cryptocurrency, trading signals, risk management, the state of the market. So if that sounds really interesting to you, we'd love for you to stick around. Please hit the like button, comment, subscribe, and then hit that bell so you get notified when we upload videos every day and when we go live, of course. So first of all, Alex, would love to say welcome to you, Marzell Money. That's awesome. How did that come about?
Thank you, Nicola. Thanks for having me on your channel. Really pleased to join you in this. So Marzell Money started as somewhat of a lockdown venture. My background's actually in advertising and media, but I always had a passion for crypto since, well, not forever, obviously, but certainly in the last 5 years. And I have a passion of investing and personal finance. So Marzell Money started in March of last year when everything sort of hit the fan. And here we are now, and we've just shy of 10,000 subscribers. And I'm pretty sure whoever's watching this video now will see that we've surpassed 10,000 subscribers. That may actually happen today, actually, because I think we're on about 9,985 people. So yeah, if you like crypto videos, analysis, TA, subscribe and come on board, because what our channel does is we focus on the technical analysis of the main cryptos like Bitcoin, Ethereum, Cardano, XRP. We have a community, like you mentioned, Nicola, where we're educating people of all different levels in the crypto space. You could be a brand new beginner, you could be an intermediate in the sense of you've dabbled in crypto, you hold some crypto, or maybe you've done a bit of crypto trading. So that's what Marzell Money is about. We're a crypto community. We like to sort of use transparency. We're not one of these channels where, you know, we post Lamborghini pictures everywhere. We're, I believe, quite down to earth, and we like to try and help each other out, basically, whether it's in trading or just general crypto, you know, enthusiastic ways. You know, there's many different aspects to the crypto market, and whether it's a hobby or something that you're interested in the technology side of things, like the blockchain smart contracts, our channel basically encompasses the whole spectrum, if you like.
Awesome. Yeah. And it is a great community. Like everybody's supporting each other to become profitable and helping each other out with the signals. I really love it for that reason. So if we were to go back to the beginning, how long did it take you to go from 1,000 to 10,000 in your cryptocurrency portfolio? And how did you get there? What was the strategy used to get there?
In terms of growing the YouTube channel?
No, in terms of growing your crypto portfolio, 1,000.
Oh, my portfolio.
Yeah.
So with me personally, I mean, like I said, I've been into the crypto space for quite some time, and I bought my first ever part of a Bitcoin. I'd like to say Bitcoin, but I wasn't that early. But I bought my first part of a Bitcoin, I think it was 2015, and I accumulated, and we got to the top of 2017, which was actually the last bull run, they call it. We're now currently in another bull run. Had a small correction the last couple of days, 20%, but that's fine. But I just accumulated, I hodled, and it got to the end of 2017, and I did actually sell some because I'd made quite a decent amount in terms of a percentage gain. And at that point, I wasn't overly serious about it. I thought, this is great. I've bought something, I've made a lot of money on it. And then the prices started to come down, and I was like, okay, I did the right thing. But actually, in the bear market from the start of 2018 to maybe 2 years ago, just before we've exploded this year in 2021, I've used that time to really become passionate and educated about what it actually is, not just an asset that you buy and it goes up and you make some money. The crypto I hold now, I intend never to sell it. And the reason for that is I believe that is the exit strategy. I don't want the cash. I want the cryptocurrency, because that's where I feel like there's value. So my journey from going from, you know, a small amount of crypto, a small amount of Bitcoin, Ethereum, to a significantly larger part of that is by obviously accumulating as I've been going through the whole bear market. I've been buying when Bitcoin was $3,500, $4,000. I've been buying it up in $20,000, and I've even been buying some at like $35,000. And if someone asked me today, is it too late to buy Bitcoin? I'll ask them, when do you need the money, and when are you planning on selling it? And if they tell me, oh, I would like to, buy and sell it and make some money this year, and I tell them, no, the way that you do it is you buy it and you hold it, and that's where the real gains are, buying and holding. Because it might be 50,000 today, and that might seem expensive from where we've come, but I'm pretty confident looking back in a few years, people will be really disappointed in themselves. Could they have not had it at 50,000? Because this thing can go to $250,000, $500,000, then $1 million
exactly.
in the medium to longer term timescale, for sure.
For sure. I think most traders, especially, and people that are already in the crypto space, understand that cryptocurrencies, coins, specifically Bitcoin, Ethereum, they have market cycles of approximately 4 years, right? So you're looking at this as a long-term investment, rather than just a short-term gain. Although those short-term gains are also there for the more experienced traders, for sure.
Yeah, so I separate it. I mean, just to add on that, I have my long-term holdings, which are safely kept, on a hardware wallet, which I advise anyone that's holding crypto to do, unless they're using some sort of company to help them with it. And then there's the trading side of it, which is much smaller percentage of one's portfolio that you can use for leverage trading. So that's the way I do it.
Yeah, awesome. Yeah, very, very good strat. So are you self-taught when it came to actually leverage trading, or did you hire mentors to help you get there?
So I would say I'm more or less self-taught, and I became passionate about technical analysis quite a long time ago, actually back in 2011, when I was watching what was happening to the precious metal markets. When we came out of the financial crisis, 08, 09, the metals were going crazy. And I had my first experience of trading on leverage with technicals, patterns. And I think now with crypto being volatile, in the sense where, it's become a lot less volatile, but in terms of trading with leverage, you can certainly use that to your advantage by trading the volatility in the market. So I had some experience, but I've had to brush up on that in the last year and kind of regain my knowledge there to make sure that, there's plenty of content around technical analysis, and it's something that I teach now as well, because, I'm passionate about it, and people are quite interested in it.
Yeah, and I think today, like when I first started trading in the stock market, was when I had a job working for in the brokerage department of a merchant bank, and we were investing institutional money. And in those days, you had charts and you had lunches with the CEO and management of the companies. You didn't have trading view. You didn't have anywhere near the amount of tools that you have today to be able to help you make your decisions when to buy and sell, right?
What we have at our disposal now in terms of technology and information is just uncanny. I mean, if you're somebody that's like a millennial or like a Generation Z, and you want to do something in terms of like start a project or build something digitally or non-digitally, there has never been a better time in history, whether it's financial or not. The resources available, the freelancing economy market with things like Fiverr. And so, what we have available at our disposal for trading and the crypto market is phenomenal.
Yeah, that's great. And it's good to see that people are using that, and people who wouldn't normally be able to invest or leverage trade can now, because there is just so much help, so much free help, as well as medium-sized payment help.
Yeah, sure. I mean, there's plenty of platforms around. One of the platforms that I've been using to trade on leverage is Bybit, but there's quite a few good platforms that people can use, and there's lots of information out, like on YouTube and other various platforms. So it's, if you want to become self-taught, the tools are there.
Yeah, for sure. So, what is your favorite strategy you like to use in trading? For me, my favorite strategy is is pattern trading, like just trading the patterns and following the Ichimoku clouds to know whether or not the pattern's actually going to turn south.
Yeah. I try to avoid fundamentals because it would drive me crazy just
Yeah.
trying to follow the news 24/7 when I'm already trying to operate other various different projects like my YouTube channel and my community and other various business ventures. So technicals have always been the main thing for me. Patterns, looking at moving averages, looking at any other indicators in the chart. And what's really been fantastic about creating this community that we have on Discord is we're all helping each other. We're all alerting each other of different patterns and what's going on in the market. So for me personally, I've always looked at technicals, and technicals can tell you a lot about where the price action is going a good 70 to 80% of the time. You will get trades wrong, but that's fine as long as you have some sort of risk to reward ratio in terms of your trading strategy. Like, you could lose a few and you can still be profitable at the end of the month, quarter. You have to do it that way.
I'm going to dive deeper into risk management because I know that's your thing.
I think it's very important to talk upon and educate people upon, because when people go into trading with leverage, it's extremely risky. And I think something like 80% of people do end up losing most of their portfolio. So I focus on that as a key fundamental prior to people actually putting a trade on.
Yeah, and I know one of our goals at the Conscious Crypto Traders is to make sure that our viewers are in that 10%. So I'm sure that's the same with you, with your community as well.
Absolutely.
So let's talk about breakouts. How do you trade them? There's a lot of different ideas on that. Some trade the breakout immediately, that you've got that candle close above the resistance, flip support. Others want to go a little bit further and come back down and test it as support. And then, there's all this gymnastics basically before you get into the trade. So how do you look at breakouts and how do you trade them?
Well, I think first of all, it comes down to the time frame that you're trading within, because often inexperienced traders or anybody new to the market in any sense will be keen to put on a trade. They always want to put on a trade. And when we see breakouts, we nearly always see some form of retest. It's more often than not, you'll see a retest. So for anybody that doesn't understand that, in trading, in trading with leverage, you watch technicals. And one of the most famous patterns is a triangle pattern. And a triangle pattern could look something like that. And if you break out this pattern here, the theory is you should get some price action to the upside. But usually you spike up and spike down. So the way I like to trade it is, first of all, what time frame am I on? If I'm looking at a 4-hour time frame chart and I'm planning to be in this trade anything from a day to several days, I certainly would want to see at least a 4-hour confirmation candle above the line of resistance we're trying to break out of. I won't trade it prematurely in the sense that we get a spike up, because we can easily on the next candle come back down and even go quite bearish.
Yeah.
So I think it's important to trade upon 4-hour confirmations. You can use 1-hour confirmations if you're like day trading, few hours in a trade, few hours out of the trade. But for more certainty in terms of the price direction of the market, you want 4-hour closes.
Yeah.
Some people even a day.
That's when you need to manage FOMO, right? Because you can see the candle just going up and up and up and up and up and up, and you go, oh my God, it's never going to come back down again. And of course, it always comes back down.
Well, what's worse is getting in early and seeing your candle go up and then seeing it come back down, and then think, let's get out of here. And so it's about managing emotions. You do have to separate yourself from the emotions of the fear and the greed, which are naturally occurrent emotions when you're trading. And the best way you can do that is by planning out your trade ahead, knowing where your resistance and support levels lay, and not being too highly over leveraged for the parameters of your trade. Too many people, when they start, they go very, very low leverage because they're very scared. They see nothing happen. Then they go very high leverage and they think, holy, and then that. So you need to find that balance. And obviously your leverage will affect other things like your liquidation price. And so risk management's very important.
Yeah, we're coming to that. We are coming to that. I think that what you said there about making sure that you've got everything well planned out before you go into the trade, and knowing your Fibonacci levels and knowing where it could possibly retrace to, and what is your strategy, if it goes south or if it goes north is really super, super important, because that way you've got something to hold on to. You don't just end up having, being this emotional mess that's like a cat that's being swung from one room to the other, right? You already know what you're going to do, which brings me to my next question. Have you got any tips for when a trade is going south? Because I know that in the early days, I would get out of a trade a little too early because I went, oh no, it's going down. I got out and I didn't need to. It's like it just turned around and the trade was a perfect trade. And the other stop losses are set too high, too low. Like what are your strategies for getting out if it's turning south?
It's a great point, because this is one of the main things I find with novice beginner traders. Because of the fear factor, people do tend to sometimes set their stop losses too tight.
Right.
And their trade that would have played out how they like it did. But of course, because they saw some downward action, people panic and they sell too early. Some of the what's actually worse sometimes than losing money in a trade is, the unrealized gains of a trade that you could have made because you've sold too early. So the way, again, going back to your TA, that you're planning out the trade initially, you're knowing where your support levels are, your resistance levels are, and just almost setting it and forgetting it. Once you've done your TA, you set your parameters, you set your stop loss accordingly to where your liquidation price is. You should never set a stop loss based on a rounded percentage, because a lot of these platforms will say, where do you want to set your stop loss? 5%, 10%, 20%. Well, that's ridiculous, because the market doesn't know what 5%, 20% means in terms of you losing that. You need to know where the support is in the market, where the resistance is in the market. I've been in situations where I know there's support at one level when we've broken down and I'm losing money in a trade, but I know there's support at another level, and it's got down to the point where I'm down a significant amount of money, and you do sweat. You do sweat at that point, because, but in fact, if you were happy to go long at this level and you've come down to the next support, in theory, you should be happy to buy even more so at that level.
Add to your position. Yeah.
And that's what I do most of the time. And that really does give you an adrenaline rush because you're even more in the hole. But actually, if you're buying more at a lower level, you're lowering your entry position, and actually your liquidation will then come down, and it gives you some more buffering. But you shouldn't always do that. You can only do that if you know where your support levels are, because otherwise you can start losing a lot of money very quickly.
Well, exactly. And especially with those wicks, you get those, which is what we had. Was it Saturday? There was that big long wick. XRP went down to $1.16.
Yeah. And if you were someone that just got into a trade because, you just shorted it and you saw that it was going down, prematurely because you think, oh, it's going to go back up, or equally it works the other way as well. People don't take profits when they should. So planning is everything. Planning your trade and knowing your resistance support levels and what the chart is telling us from a technical point of view. And that's what me and my community are focused on, and what I speak about on YouTube, TA, because although it can't be 100%, it is pretty accurate, to be fair.
Yeah. So Alex's or Marzell Money's channel and the Discord server link is below in the description for those of you who are interested. And of course, we would love for you to support us by giving us a like and making a comment. We try to get back to you as quickly as possible with anybody commenting. Subscribe, hit the bell, click all so that you can keep getting notified of all these juicy conversations that we're having to help you become more of a conscious crypto trader. So trading with leverage, i.e. borrowing money off the house in order to up your level of return, is risky. We've spoken about that. Do you have any tips on that, or is it pretty much the same as what we just said, where with making sure that you're planning out the trade really well in the first place?
Yeah, so when it comes down to leverage, again, let me highlight, it is risky. And it really is for experienced traders. So before entering into any kind of trading with leverage, it's important that you understand what leverage is and the power it has, because equally you can make hugely magnified gains, you can make magnified losses as well. So just when using leverage, understand how that's going to affect what's known as the liquidation price. When we borrow money off the house, as you put it, and we're trading on borrowed money, because that's what leverage is, you're going to have something called a liquidation price, where the broker isn't going to keep spotting you anymore if the market goes down. So what you can do in a lot of trading platforms, including the one that I use, which is Bybit, they nearly always have like calculators built in where you can input the parameters of your trade and it will tell you where your where your liquidation price will be.
Yeah.
So you can plan and see if that weighs in well where you want to set your stop loss. So again, it comes back to planning. Leverage is a fantastic tool, but it's also a dangerous tool if not used responsibly.
Yeah. One of my favorite strategies on that is to do all of my own technical analysis, look at the Fibonacci's. I'm really big on the Ichimoku cloud because it can, tell us in advance that there might be a sudden move in the market. It's not always accurate, but it's accurate a lot of the times. And then watching other YouTubers like you and seeing and being on your Discord server and being like, I've got YouTubers that I follow in different time zones. So if I'm if it's late in the afternoon for me, then I'm turning to the Australian market or the American market. Or if it's late at night, then it's the Chinese market, and then of course you Europeans coming on board and Brits. So it doesn't matter what time of day it is. There's a YouTuber somewhere that's helping you with their analysis, and you can use that as a really good sounding board.
Yeah, and it ties in nicely with the fact that the crypto markets are open 24/7, so which can be quite stressful sometimes because there's no like respite. But there's plenty of information out there for free, so it's a fantastic time to be trading and in the financial markets.
Sure. So what is your favorite coin to trade if you have one? Like, what do you find easier? Like I have, we're Teresa and I are trading on behalf of Vistamundo. It's a conscious community that's being built here in Costa Rica. And so we're using it as a fundraiser to have that community set up and also supply jobs in an area that was being really badly hit with the pandemic. But so we're a little bit more conservative than most people, since it's not strictly speaking our money. But I love Ethereum, and I hear a lot of people say, "Oh, Ethereum, it's just so volatile," and I find it the opposite. But do you have a favorite coin to trade? Or
yeah, sorry that this won't bring too much variety, but for me, it's Ethereum as well. I'll tell you why, but Bitcoin's fine. Bitcoin's quite sturdy. I see it more as the gold, and I see Ethereum more as the silver or the oil or something like that. I think with Ethereum, it generally does keep up with what Bitcoin's doing, and it moves a little bit more aggressively than Bitcoin does, up or down. And I don't know if this is proven or I could be entirely wrong, but I've seen because I do monitor all my trades and my performance, and I have a better track record with Ethereum. Maybe there's something in the market that is slightly more predictable than with Bitcoin, and that could just be a coincidence, but I find it easier to trade. I find the signals a bit clearer, and it's a very liquid market. Obviously Bitcoin as well, but then going after Ethereum, you've got things like Cardano, XRP, and trading those can, if you're more than like 8 times leverage in any of those altcoins, you better make sure you've got a good heart, and you can be put through the paces, because that can be a bit of a roller coaster. So
yeah, XRP is great when it goes, right? When it goes, it's a really exciting ride. But when it's
sure,
it is volatile. Yeah,
very volatile.
Yeah. So what are your favorite altcoins then to actually hold for this 2021 bull run?
Yeah, I'm holding Cardano. I'm holding XRP. I've held on to my XRP through all the stuff with the SEC stuff, just because I've used XRP before and I know how much of a powerful money it is. I mean, you can send it anywhere for free. It takes 1 second. There's no cost. And I feel that what's going on with the whole SEC will come out one way or another in favor of what Ripple are doing. So yeah. I've held on to my XRP. I've got some Link, like Chain Link, but mainly I'm like 70% Bitcoin, Ethereum, and the rest is Cardano and XRP. I don't buy all the other like smaller altcoins. There's been times where I've done some like swing trading, like with a few coins like Kyber Network, KNC, Polkadot. But ultimately, the coins I want to hold for the long term are Bitcoin, Ethereum, and a smaller exposure in Cardano and XRP.
Yeah, we've decided that for this bull run to have greater positions in the majors rather than a whole lot of small positions in all of the smaller coins, because longer term that just kind of feels right, and you catch the others on the other end of the bear cycle. Because when you have a look at how altcoins performed in the last bear run, very few of them were still standing at the end of the day, right? So it's a much higher risk unless you're getting in and out.
Yeah, I think Bitcoin and Ethereum have very much established themselves now for what they are. Bitcoin being the digital gold store of value, and Ethereum being the network, which isn't just for finance. It's going to be, for many different applications going into the future. The other coin, I mean, hundreds of coins are built upon the Ethereum network anyway, but I just feel that you get enough exposure to what's happening, this disturbance in the financial system anyway, by holding Bitcoin and Ethereum and maybe a couple of the alts like XRP and ADA. So yeah, for me, if I want to take on any more risk, I'll use leverage trading as opposed to buying the smaller coins that, in my opinion, are too risky to buy and hold in terms of like a long-term position. And I'll get it wrong on some, but the ones that would have proved me right will be enough to wipe out a lot of the portfolio money. So I keep it quite conservative in that sense.
So will you sell any of your altcoins like Cardano, XRP, or Ethereum, which are your main ones, at the top of the market cycle to buy back in at a lower rate, or will you just keep holding them?
No, I've made that mistake before, like in the previous bull cycle. Things would go, when things go up and up and up, you get worried and you think the market's going to turn, so you sell, thinking, okay, well, I can see the market's taking a downturn. In a few weeks, I'm going to buy back in when we've had a 20% correction. And lo and behold, the market keeps moving, you've missed out, and you have to buy in more expensively. And the best thing you can do for a long-term position is just to buy and hold. It doesn't matter if it goes down. What the education I've got now about, cryptocurrencies, Bitcoin, Ethereum, I wish I would have had in the last bull cycle, because I wouldn't have sold anything. And ultimately, if you've got one Bitcoin, one Ethereum, it's still one Bitcoin, one Ethereum. It doesn't matter the monetary value to me. You know, if Bitcoin goes up to 200 grand tomorrow, I'm not selling. Like, it doesn't bother me in the slightest. XRP and ADA, I would be more tempted to, but I would really do my best to kind of keep hold of it, just because they're a little bit more unknown, a little bit more volatile. So yeah, I buy and hold.
Buy and hold. Okay, cool.
This is a 10 to 15 year plan, you know.
Yeah, good. Yeah. And that's good to know too, as part of your strategy. It's like, well, how long are you holding it for? And I think that we are in for a really volatile 8 years. As you know, from a historical perspective, we're coming up to the end of the cycle of the individual rights are trumped by the group consciousness. So, you know, we do things for the group. And then that's going to flip. But until that flips, there's a lot of curtailing of freedoms. There's a lot of, you know, all sorts of stuff on the political scale that's going to affect the financial market. So I think that it is a good strategy to just accumulate and hold, accumulate and hold, accumulate and hold.
I think what's important to say is, you know, whatever your total net worth is, portfolio is, like across any other assets you have, whether it be stocks or property or any kind of investment, you know, you don't want to put everything into crypto. And coming from myself, who's all about crypto, I would say I'm very overweight in crypto compared to what, you know, many people would consider as sensible. But for anybody that wants exposure to it and they're not, you know, going all out, you know, I think even having 10% of one's portfolio into crypto is a good exposure. So, you know, if you've got like 10% exposure into crypto, you don't need to worry if the price goes down 50% or the price goes up 50%. You just want that exposure because you know that it's going to be part of our future, so to speak.
Exactly, yeah. So there's been a lot of talk in the last couple of weeks about the pie chart and this cross happening that has in the past signified the, you know, the top of the cycle going down into the bear market. We've just had a 20-25% dump. We could be going a little bit lower. What is your take on that? Do you feel like we topped out in Bitcoin at 64,000 something or other, or whatever the top was, or do you feel like we might be heading back up again at some stage?
Yeah, I don't think this is the end of this bull cycle by any means. No, I feel like the market needed this correction, and there's a lot of obviously leverage positions, and there's a lot of like weak hands that have to be shaken out of the market for it to grow again. You know, I'm not saying that we're going loads higher than where we were in this bull cycle, but it would be very realistic to assume that we're going somewhere between 75,000 and 100,000 at some point this year as a bare minimum. I mean, I wouldn't be surprised if we saw prices of 125 to 150. We've got institutional money in the space. We've got the bigger, you know, money in the space. It's not just retail now, and we've got so much more information and exposure of Bitcoin and cryptocurrency. Like, people can buy it so much easier and so much more accessible than it was 4 years ago. No, I don't. I think that the big money now, when they see big corrections like this, it's when they start filling their boots. So I think we've got quite a bit of a way yet to go in this bull cycle. I would expect at least prices of, I think 75 is on the very lower end and 150 is realistic. Could go above that.
Yeah. Willie Woo, who is a fellow Kiwi, I just recently found out, because I've read a lot of his analytics and I have heard a lot about him, and I only just recently saw him on a video and went, oh, that's a Kiwi accent. He's talking about us having potentially two market tops, like having this major correction and then going up and having two bear runs within two bull cycles within the overall bull cycle till we get that 2 year dump or dumping time. So I think that that kind of feels right to me. It doesn't feel like it's over, and it feels like we're going to do another good crack at it.
Yeah, I mean, going by the technicals, if you did a very long-term overview from what happened in early 2017 to the end of that bull cycle, the percentages that the market moved up, if you were to apply that to today's bull run, where we're nowhere near where the projections actually take you to a figure of around $250,000. So that's realistic. I wouldn't go on record and say that's my prediction, but it wouldn't surprise me.
Yeah,
wouldn't surprise me. What would surprise me, if this was the end of this bull run. Nothing really indicates that right now.
Yeah, which is good. I don't want to have to be shorting yet. I'm interested in the longing. The strategy when we get to the top of the market and we're going to turn around and we're going to come back down into a 2-year bear cycle for you is to hold, right? Hold what you've accumulated.
Yeah, I mean, the bear cycle, I mean, that's what I was doing. Fortunate timing for me when I was learning about what crypto actually stands for, what it means. It's not just something you buy and it goes up and you make money. It's the bear market is where you really do want to accumulate. Of course, I mean, it's never a bad time to buy if it's for the long term. I mean, just 1 week ago, anybody that bought Bitcoin ever would have been in profit. So obviously we've had this big correction now. I say a big correction. I mean, it's 20% in crypto standard. That's not crazy. When in doubt, zoom out. If you just zoom out the chart, it gives you a lot of peace of mind to see where the actual overall projection's going. So yeah, these dips I'm buying for my long-term holdings.
Yeah.
And when we see corrections in the market, I try and catch them by shorting the market via trading. I find shorting the market in a bull run very difficult, actually, because when we're in an overall bull run, it's very difficult to short. It's a lot riskier than going long.
Yeah, could just turn around on a dime. So risk management is your thing. What do you take into consideration when you're weighing up the risk of leverage trading?
Yeah, one thing that I always take into consideration is something that's known as a risk to reward ratio. There's actually a tool for this on TradingView and other chart platforms. And you always want to know if you're getting a fair deal in terms of where your stop loss you've decided should be and where your take profit should be. And what I mean by that, say, for example, you've got a 2% move to the downside to your stop, and you've got a 10% move to the upside on your long. That would give you a 5-to-1 risk to reward ratio, which is pretty good. And what that basically means is even if you lost 4 out of 5 of those type of trades, you still break even. So I always go by that as a main rule of thumb. That's one way to manage risk. The other way of managing risk is in and within your own portfolio. So as a rule of thumb, through my community on YouTube and Discord, and where I set my trading risk is I'll never expose myself to losing more than 5% in one trade of my trading portfolio. So whether it's all leveraged or not, I won't allow more than 5% of my trading portfolio to be lost in a single trade. And that way you're bankrolling essentially.
Yeah, you can come back and trade another day and make up for it.
Yes, exactly.
So going back to the first strategy is like using that risk to reward ratio tool that, like if you're using TradingView, that's the tool, one of the tools on the side, right? And the ratio that I was told is good is 2-to-1 or 3-to-1. 3-to-1 is better than 2-to-1. Do you have a ratio that is your minimum? Like if it's below this level, it's too risky?
I really don't like anything under 3-to-1. I tend to trade quite smaller time frames in the sense of like the hour chart, and I'm getting in and out of trades in several hours sometimes.
Right.
So I feel like you need the good risk to reward ratio to come out profitable when you're trading on slightly higher leverage. When you trade smaller time frames, you typically use slightly higher leverage. So for me, as a benchmark, 3-1 is what I aim for. There will be mitigating circumstances where I might take something that's 2-1. But yeah, generally 3-1 is the minimum I like to go for in terms of a risk to reward ratio.
Yeah, I think that's one of the good things about being part of your community on the Patreon group and the Discord server, is because you are doing those smaller time frames and you're getting in and out during the day. There's a lot of technical analysis and a lot of movement there for people.
Yeah, and it's a very active server because it's an active trading type of strategy we use. There's a lot of people on there at most times of the day because we've got people from all over the world on there.
Yeah.
So it's also about education as well. People are coming in there as beginners asking things. So yeah, it's a great community, and we're building it up. So yeah.
Awesome. And again, guys, the link below for that is in the description underneath this video. So you're not spot trading, so you're not using stable coins, so you wouldn't have a favorite stable coin?
I mean, sometimes I'll trade with USDT just because of the broker I use, Bybit,
right.
Says you need to for certain coins. But generally, I'm trading actually in inverse perpetual coin margin, which is trading with Bitcoin or Ethereum. Mm-hmm. The thing is, if you're going long, if you're in a bull market, you want to trade in inverse perpetual, because if you make Bitcoin in profit off your trade, the Bitcoin you're making is more valuable when you've come out the other end of your trade, if that makes sense.
Yeah, there's two lots of profits there, right? There's the accumulation of the Bitcoin and the value.
Exactly. And if you're going short, yeah, sure, you might make a profit in Bitcoin, but that Bitcoin is now less valuable because the price has gone down. So yeah, I generally like to trade in coin margin using Bitcoin, Ethereum to fund my trades.
Okay. And favorite crypto trading platform?
I use Bybit. I've used a couple. It's my favorite. I find it really easy to use, and it's quite a liquid market. You can generally get your orders filled on there. I've had a couple of issues in the past, not relating to the actual trading side, but customer service stuff, and they were really good with sorting it out. So yeah, I use Bybit.
Yeah, awesome. So just finally then, what would be the parting pearl of wisdom for those who are trading the volatility of the market, given that we had a pretty big scare over the past weekend?
It just comes in education. Education is power. It could be applied to anything. Don't get into something you don't understand. Learn about it first. Check out all the content that you guys are doing on your channel. Look at other channels like myself. That YouTube, you can spend days and days and consume such valuable free content.
Yeah.
If you don't understand something, research it, ask questions, join communities, and once you have the knowledge, then put it into practice. Start with smaller amounts. If you are trading where it's not going to be life-changing or really affecting too much, you can actually use it as part of your learning experience, if you like. And just the best way to learn once you've got a basic understanding is to have skin in the game. Just put on a few trades. Don't put much up for risk, and don't over leverage yourself more than you need to, because you can still make significant gains using up to 10x leverage in the crypto market. That's why we trade crypto, because of the volatility in the market. So yeah, don't run before you can walk, and just try and consume as much knowledge as you can.
Yeah, and if you're accumulating Bitcoin and Ethereum, I think that you're in a good, you're in good standing for a long term hold of value, and who knows what's going to happen, in terms of your ability to actually use it in trading. I mean, already Vistamundo, the community we're building, allows you to buy property in Bitcoin and Ethereum, and there are many other real estate agents that are taking it now. Many places around the world accepting crypto. We've got it now. MasterCard and Visa are looking at merchants being able to accept crypto. So the idea of accumulating it and holding it and using it in other ways other than just turning it into fiat currency, which is fast becoming worthless, is I think is a good thing.
Absolutely. I mean, it's funny when I get asked questions like, "Oh, when do you think I should sell?" Or when's the right time to sell? And and these are people not talking about trading; they're talking about, and I just ask them, I just say, why do you want to sell? And they always say, "Oh, well, to make money." But the whole point you get into crypto in the first place is to get away from the money, isn't it?
Yeah.
So,
yeah.
It's the thing with cryptocurrency. It's more than any other asset in the sense of, it being a property or a stock. You're buying a new money. You're investing not only into an asset, but it's a disruptive technology changing the financial system and structure of the world. We're in this peer-to-peer money. So it's, for me, I think that the answer is in cryptocurrency, in Bitcoin, in Ethereum. So for me, like I said earlier, I'm not selling. So I feel like the future's very bright for cryptocurrency.
Yeah, I do too. And we hear a lot of people talk about managing your emotions, having the right mindset, and psychology being such an important part in being profitable if you are leverage trading. Do you have a specific thing that you do as a routine to get your head on straight before you go into the markets?
Coffee is very important. And if it's an early start, 2 coffees. But no, it comes down to the technicals, the technical analysis. If you go in, and it's like anything, if you go in negative, in a bad mood, or you've potentially had a loss prior, and you're going in and you're not in the right state of mood, you're only setting yourself up for potentially doing that again. It's important to be fresh-headed and going into the market. Sometimes if you go through a bad period, or a period where you're just not really able to make much significance, sometimes I'll literally just delete every line and indicator on my chart like a blank canvas. I'll start getting completely fresh, and I'll approach it with a different view. There's no one way to skin a cat when it comes down to trading, and that's the beauty of it, that you're using many different variables and technicals to give yourself an advantage over the market. Because ultimately, if you're buying something, someone's selling it. If you're selling, someone's buying it. So you're not against a house. It's a peer-to-peer platform trading. It's one of the oldest peer-to-peer platforms there are. So you want to have a fresh head when you get into this, because there's people out there that are going to be fresher and hungrier and smarter than you. What you can do is just be consistent, and the way that you can be consistent is by being fresh and being educated.
So have you ever suffered a big loss? Because I know in the early days most traders do have losses, and that's part of the rite of passage, really, isn't it? And then you learn from that, and then had to deal with that. So I'll give you an example of what happened with me with the Bloody Monday. It was the Valentine's Day. Huge crash, wicked out. Everything was perfect. I would have been absolutely fine except for that really big wick. And I felt sore, like I felt like a bully had come into the schoolyard and wreaked havoc. And I actually felt physically sore. Now, I am somebody who teaches people how to deal with that kind of energy. So I know how to do a breathing technique to just move that out of the cells of my body, so I don't have the memory of the loss going into the next trade. And then I won't be so fearful to do it because that memory is gone. Do you have a technique, like if you suffer a big loss or a big dip like that you deal with, or is it just coffee, clear-headedness, TA?
Yeah, I mean, to the first part of your question, yes, I have had not a big loss, but big losses. I think when you're cutting your teeth in this industry, if you're not going in with the right risk analysis, risk to reward on trades, which is inevitable a lot of the time, you will lose money. And I did suffer a couple of big losses, really big losses. And from that point, I feel like it's made me a better trader today because I had to go away and really go back to the drawing board and figure out what I did wrong. I wasn't prepared to just think, okay, it's not for me, because it bugged the hell out of me that, I came into something and, I got completely wrecked. So, and that's also what's fed into now me being someone that, really promotes the idea of, risk and managing risk. And, even on my Discord community, one of the channels we have on there is a newbies channel where more experienced people are there to answer questions. And we don't want anyone going into a trade blindfolded, because a lot of the platforms around nowadays have a habit of making it very glamorized of, trade or margin trade. You can lose a lot of money very quickly. So the way I manage, and to answer the second part of your question, in terms of managing emotions when that has happened and when it does happen, because obviously I've had many losses since then, you just need better gains than losses. The best thing to do is to just trust the knowledge of your overall strategy, that you are going to lose as well as win, and you can't look at it on a trade by trade basis. Of course, when you have a fantastic win, it's hard not to, or when you have a bad loss, it's hard not to. But ultimately, you need to remind yourself that you're looking at this month to month, quarter to quarter, every 6 months, and then have a look at how you've done, because the big losses will come. It's inevitable. It doesn't matter how good of a trader you are. You will lose as well. But it's about making more than you lose overall. It's kind of like any good poker player, for any poker players there that have played poker. It's a game of skill, but also luck. But the more you play, if you play disciplined and you're skillful, ultimately you should come out on top.
Yeah. I think it's unrealistic to think you're never going to lose a trade, because there are moments when the market is in manipulation, and there's just no way you can see that coming, right?
Of course, the market can work in mysterious ways, and sometimes it just completely catches us off guard. And that's why it's so important to use stop losses and know about managing your liquidation and everything like that. So there are preventative measures for anyone that wants to get into trading. Don't be fearful of what Nicola and I are saying here, but you just need to put in the right risk management in terms of your trade and in terms of your overall portfolio.
Yeah, awesome. Well, it's been enlightening, and I really enjoyed the conversation.
Me too.
Thanks so much, Alex. And we'll be seeing you in your Discord server. I'm going to drop the link below here, as well as Marzell Money, the YouTube channel, so you can go over there and subscribe. Marzell Money really is a great channel for daily analysis and what's going on in the market. And for me personally, it's helped me soundboard my own technical analysis, but also sometimes the things that you don't see. So it's really great to follow Alex, and to see sometimes you just don't see something that another technical analysis will see. So
yeah, I've really enjoyed it. Thanks for having me on, Nicola, and I wish you guys all the best with your channel. And everybody watching, make sure to subscribe and like, and we'll be providing more content, and we look forward to having more people in part of this whole crypto community we're building and adding value to.
Definitely, we're creating a new world together, guys. Be part of it.
Absolutely.
Thanks.
Thank you, Nicola.
Bye.